The cybercab is coming and robotaxi before that. And soon, perhaps, but when? That is the big question. And what on earth is it going to do to the financials? Why don't we talk about that? Why don't we talk about the what's going on with FSD revenue recognition? Why don't we talk about the financial reports? More generally, I'm joined by Matt Smith from Rebellionaire, heck of a guy and a smart cookie too. I'm Brian. Welcome to Futuraza. Matt, great to have you back.
Thanks, Brian. Great to be here.
From 30 seconds ago. Definitely not. Definitely a different day. We just wear the same clothes all the time because it's.
I wear this every Tuesday and Wednesday, or whenever this is.
Yes, that's right. It's Christmas week. Who does laundry? I don't think it's allowed. So one thing I wanted to ask about is, in terms of, I'm sure you've tried to model the financials of Robotaxi, and I imagine, and you can correct me, that as soon as you put in even the most conservative numbers, they start getting a little bonkers almost immediately.
That's an accurate statement. Yeah.
Yeah, because I've had people send me their models and I say, I hate to do this to you, but I think your numbers are too conservative. And they say, I know, but when I put in the real ones, I look like a mental patient. And to be fair, if they're messaging me, they probably are, and that's fine. I'm here for your support group. What do you think is the most likely outcome? Is it going to be as insane as we think it is?
Yeah. So, I mean, it's so hard to say exactly how this is going to pan out because this has never been done before, right? So we are all guessing. Um, I think it's going to be insanely profitable on like a unit basis initially. But it might take a while for that to translate to insanely profitable for Tesla overall. Because I mean, let's just assume they start in 2025, like they said they would in California and Texas, and probably within limited geographies there. I mean, you might be talking about a few thousand or maybe a few tens of thousands of vehicles operating as robotaxis, at least initially. And so even if those are charging, $4 per mile or $3 per mile, like it's like very high margins on a per car basis, the economics are going to be like wild, I'm pretty sure. But just because the quantity of vehicles is so small relative to the millions that Tesla will be selling, I don't think it's going to overnight transform, the earnings per share profile. That said, I do think having them actually start to hit the bottom line, and that's going to be a pivotal moment for the company and for analysts when they say, hey, okay, like this was just a dream, now it's real, like there's the earnings. And I think it's going to be pretty clear that these will be one, like extremely high margin earnings, but I think the thing that's going to be like most bizarre is how quickly they grow. So like the earnings growth of that part of the business, I think, is going to be like insane.
I think it was about 2 years ago, I asked you, when on earth will Wall Street start factoring in numbers, start modeling for stationary storage? And your answer was when it hits the bottom line in a meaningful way. And I think it was the next quarter that it did, and they initiated coverage. And then within 6 months, everyone was modeling it as well. So I think you're right on that. Are there any other autonomy players outside of China that people should have their eyes on?
Maybe I'm biased, but I don't really think so. I mean, Cruise is obviously not an autonomy player anymore, and I think they're one of the kind of handful of players that all the Tesla skeptics out there were saying, like, look, like Cruise is already doing it, Waymo's doing it. I mean, like Waymo is the one that is actually doing something now, so they're probably worth monitoring. My view is their business model is garbage. So like even if the technology is like undeniably more capable within those geographies today than Tesla, so like give them credit where it's due. They've got a good product for what it is right now, but it's not scalable. It's not profitable, and so like I don't think from a like market saturation or like who's going to get the market share and the market cap that comes with it. It doesn't matter if Waymo has like 100% of the market right now, if that market is going to get obliterated because Tesla's able to eventually serve those markets and all the others better and like more cost efficient and at higher margins. Like that's where Tesla, I think, is that's why Tesla matters so much, because they're going to tick all three of those boxes, which is very hard to do.
My concern with Waymo's approach is they're starting with a $50,000 car and then making it substantially more expensive and less reliable because it was never meant to be that. And as a result, their upfront cost becomes as much as Tesla would be able to get away with charging for the actual ride. So that makes it kind of a problem. And their vehicles aren't, a Hyundai is a great car. It's going to go 150,000 miles, even with some abuse on it. The RoboCab is not designed for 150,000 miles. It's designed for substantially more. Okay, enough about that. What happens if out of the blue someone beats Tesla to the market? What if Zoox tomorrow solves it, somehow magically solves it? What does that change?
Yeah, it probably changes a lot. You know, a lot of my modeling, at least, is based on Tesla being, a low cost competitor. Big part of the assumptions when I'm modeling that out is, starting from high dollar value, and then as the saturation occurs and you're doing, millions of rides, then like the price that they charge comes down, and eventually getting to the point where you're undercutting the cost to operate an ICE vehicle. So like if you can get below 60 cents per mile on your cost, which by the way, the Cybercab definitely can, if you do the analysis on it, you can charge your your riders less than the cost to operate a gas car. And at that point, like you like the market is just enormous at that point. Um, but if you're talking about like a total automotive market of like 100 million vehicles sold per year, I think if you look at how high the utilization will be of autonomous vehicles, then that might become something like 20 million units a year potentially. And so if that 20 million units like is split between a Zoox and a Tesla, that's a lot different, kind of share price implication than, if Tesla has, you know, the majority of it, or something more like 60-70%. So
Hmm.
it definitely matters how many competitors are in there, and frankly speed to market is super important.
My thought is if somebody were to solve it today, say we've got the working system today, I don't think they could get it out in any kind of numbers before Tesla could if they solve it in a year. So I think Tesla has, because there's already millions of them on the road. So I think even that, and the Zooks, I don't know who would build it. They would need to find someone to build it. They need to go through all that uh, difficult engineering, because I'm sure what they built that they're using today is a wonderful vehicle that has not been cost optimized. Why would you bother with it that early on? I don't think it's important. Now, here's a financial spreadsheet question for you, a quarterly report question. We've been recognizing some percentage of the deferred FSD revenue. If we go unsupervised, let's say Thursday, which it might already be. Elon's got a big announcement for Thursday. Hopefully, it's not, you know, that the action figures are back in stock. Uh, let's say we go unsupervised in February. At that point, you could count 100% of FSD deferred revenue. How much do you think there is, and what would that do to the quarterly numbers?
Yeah, so I don't have the exact figures handy, but from what I recall, Tesla had about one to 1.5 billion of deferred FSD revenue that they thought they would recognize in the next 12 months, and then some amount that was going to be recognized after that. So I do think it's important to note that this is geography specific.
Mm.
So like most of the FSD, almost all the FSD revenue to date has been in North America, because that's all with the where the FSD capabilities have been. So if they sold a car in Europe today that was with FSD, they would recognize almost none of the revenue. So in other words, um, as it expands to China, like you're going to start recognizing more there, and then presumably take rates should increase as well. And then after that, same thing should happen in Europe. So if they snap their fingers on Thursday and delivered full unsupervised
Unsupervised.
FSD capabilities in the US, I would assume something like 95% of the US based deferred revenue would be recognized, because then you'd only be on the hook for kind of continued improvements, which you're obligated to give to your customers. So I do think we're talking about like roughly a billion ish in the U.S. that is going to be recognized in the next month, or in the next month. That'd be great in the next 12 months. And then more after that. And I think the biggest thing is that like the deferred revenue is great. That's on past sales of FSD. What really is much more exciting is how many people are either buying or subscribing to FSD, and how does that overall kind of take rate change as you, one, improve the capabilities, but two, expand the geographies. I mean, both of those would point to me to kind of exponential growth in FSD take rate, which
I
is a
think
much bigger deal than how much did you recognize.
I think you're right on that. And I think, even a nice, let's say you got an extra $1 billion in a quarter, Wall Street would write it down and say, well, it was a one time. I'm not excited. Uh, Question for you is, where on the spreadsheet does a sale on the quarterly earnings, where does a sale of FSD appear and where does a lease of FSD appear?
Yeah. So the the sale, at least so the portion of the sale that is recognizable would show up in automotive gross margin.
Mhm.
um, but then the balance that's not recognizable yet would go on the balance sheet as that deferred revenue.
Mhm.
For a subscription, uh, all of that just shows up in automotive gross margin. And so the
Okay.
thing that's going to happen with subscriptions is, just as that number rises over time, eventually that's going to start to really buoy automotive gross margin, because I mean that's 100% profit. It's I think it's a small number of subscribers today, and frankly, it's at a low price. Like $99 a month is lower than I ever thought we'd see FSD. So I do suspect that will increase over time. Um, yeah.
I suspect so too, because at 99, it really doesn't make sense to purchase it because
No.
80 months to break even. You could put your money in a money market and get an extra month or three out of that. It'd be, yeah, it's quite reasonable. Last thing I wanted to talk about, and when we get to this, we're going to be talking about supercharger revenue here for a second, but wanted to mention comments, leave them. You got to, what did we miss? What do we misunderstand? All that good stuff. Like, subscribe if you haven't. But Matt's not leaving yet. I won't let him, because I got to ask, supercharger rates, we've seen them climbing quite a bit. Power rates have not risen as quickly as supercharger rates. There was one by me that used to be 12 cents. It's now 15 in the overnight hours. But a lot of places, even in the Northwest, where we used to see 20 to 25 cents, are now in the 35 to 40 during peak hours. That's a lot more. And I understand peak pricing is designed to mitigate congestion, but even the off peak rates have gone up. Uh, is this a profit center or are they still profit neutral, do you think?
I don't think they're either. I think they're. I think they actually said somewhere that they're targeting like 20% ish gross margins on all their businesses, including supercharging. So I suspect it's probably something where maybe they used to be at like 5 to 10% margins on that part of the business, and maybe they want to get it up to 15, 20. So maybe that's part of the increase. But there also have been some increases in pricing, and probably especially on wholesale power markets. Those can vary so much, and the exact rates that you and I are seeing as consumers, they tend to have something like an 18-month delay on what's actually happening within the power markets. So like wholesale power markets, those prices are adjusting, live real time every 5 minutes, and there can be huge swings. So I don't know exactly how Tesla's agreements with the actual power providers at each one of these superchargers work. I'm sure a lot of them are different, but I would suspect it's almost certainly the case that Tesla is seeing getting the exposure to the kind of swings in price volatility more so than you and I as retail consumers would be. So I don't really suspect they're gouging or really like trying to profiteer off their customers. I do think there's been increases in capacity charges and grid balancing costs and grid infrastructure costs that I suspect Tesla has to pay.
Well, I'll run two things by you and you tell me if I'm crazy, but here's what I think is going on is that the rates that we're paying also cover the construction itself. It's not just covering the operating costs, but covering expansion of the network. And the second is that everybody who gets free charging, somebody has to pay for it, and it's the rest of us.
Yeah, there's probably some truth to that. Although I think from a pure accounting standpoint, I think the free supercharging guarantees hit the upfront sale price, if I'm not mistaken. So
Mm.
they technically don't recognize all the revenue from that because there's this expense that they're withholding. Um, so they probably are trying to balance that all out to some extent, but I'm sure it's a variety of factors. But I mean, even with the numbers you spoke about, it's not like it was you know, whatever 20 or 20 cents and it jumped to like 40 or something like that. It's it has certainly increased, but it's not like it's doubled in 2 years. So
What I'm
I don't
seeing
know.
is, in a lot of the country, it used to be cheaper to supercharge than to purchase gasoline. And for a lot of states, the power rate at a supercharger is higher than what gasoline would cost. And for me, for the math I did based on my power consumption when I drove out to Muskegon last June. And by the way, we're going back to Muskegon this June. Join us, won't you? Everybody out there, we have a lot of fun, some amazing guest speakers, and it's going to be huge. You're going to love it. Is that for me? It was about 38 cents. 38 cents a kilowatt hour was about what it would have cost me in gas, not on a car comparable to the Y, but comparable to what I would have bought, which was a minivan. So anything over 38 cents, and I'm backwards. So it's just tough. If we could just bring it down just to just under gas prices, that'd be great. Maybe we just need higher gas prices. I don't know. Any closing thoughts on that?
Yeah, I mean, one of the things that surprised me in the last 5 to 10 years even is like gas has stayed relatively cheap. Like I kind of assumed we'd be at like $4 or $5 gas by now. Instead, we're kind of going the opposite direction. So I mean, like the U.S. oil and gas sector has done incredibly well finding new resources. I think with Trump coming in, we're not going to see any kind of increase in gas tax or gas prices anytime soon. So that's maybe one piece of the overall kind of value proposition puzzle that I certainly got wrong. That is proven to be gasoline is proven to be more kind of cost efficient than electricity. I mean, electricity prices are going to continue to march up as data center demand and like the cost of building out the infrastructure, like all this stuff is really putting a lot of upward pressure on electricity prices. So you can like that. I think what's going to happen is that's going to make putting residential solar more attractive for more and more people. So like maybe you can opt to defect from the grid a bit more, especially if you're in southern latitudes, unlike us. But I think for your kind of general consumer who's not going to put solar panels and kind of be their own utility provider, it's just going to, I think the relative cost efficiency of charging on electricity versus gasoline is not going to be as compelling as maybe we thought it was a few years ago.
Awesome. I appreciate your insights. Thank you so much for joining me, Matt. Everybody out there, hope you loved it.
Thanks, Brian.